Vitaly, thank you for being with us today.
My pleasure.
You say that the U.S. economy is on steroids. What exactly do you mean by that?
I look at the U.S. economy as an athlete. Athlete fell, broke a couple ribs, and but he still had the marathon to run. So what happens? You basically pumped an enormous amount of steroids into the athlete. Athlete, got up and he's running. So we look at him and he seems to be doing all right. But what we don't see is that this performance is completely driven by the steroids at work. In the case of the economy, we have this giant amount, enormous amount of stimulus pumped into the economy, and that's what keeps us going. That's what is responsible for the economic numbers that we see. GDP growth.
Cash for clunkers, financial injections.
Exactly.
So what is the longer-term damage of so much stimulus?
Well, we have all the stimulus like cash for clunkers. We have the mortgage market is completely the Fannie Mae and Freddie Mac are responsible for 90% of the loans, etc. And interest rates are extremely low. Okay, so the problem is at some point we're going to have banks generate loans. At some point we won't be able to keep interest rates at this level.
Mm-hmm.
So when interest rates rise, that's going to be a tremendous headwind to the economy that's kind of addicted to the low interest rates. So the bottom line is this: it's in the future we're going to have probably a higher debt burden, higher taxes, and high interest rates, and it means we're going to have a lower economic growth, and that's not what is priced into the stock market today.
So what is the detoxification process going to entail? That's what we have to look forward to. This is going to be painful.
That's right. I mean, I guess we're going to have to check into rehab. It's going to be probably painful because economic growth is going to be slower. If you look at a lot of stocks today, they are looking at the recovery as if we had a 2001 recovery, as if it was a normal recession, recovering from a normal recession, and the cyclical stocks are basically priced for perfection. And I'll give you an example. On the last earnings call, maybe the one before that, Caterpillar, they said they expect the revenue to start to grow in late 2009, 2010, because they will benefit from $3.7 trillion global stimulus. The question is, what is after that?
Right.
Are we going to have another $3.7 trillion stimulus? So the bottom line is a lot of the stimulus is still in future demand, and that's what we have to look forward to. Lower growth, than many people expect.
So do you think the market has gotten way ahead of itself?
I have a watch list of stocks, which is kind of 300 stocks I look at, and for each stock I have a buy, hold, and sell based on valuation.
Mm-hmm.
Only a handful of stocks are buys right now. So this market is fully valued, and a lot of stocks priced in this incredibly, V-shaped recovery that's
mm-hmm.
very unlikely to happen.
Now, you're saying that the market is pretty much range-bound for some time. Obviously, investors buying at support, selling at resistance. That's where they're going to make their money. What stocks and what sectors are you interested in right now?
Let me clarify one thing. Okay, the range-bound market, that kind of implies what you just said.
Right.
Well, when the week after I wrote the book, I realized that I should have used the word sideways, because then people don't assume that I know what the range is. Okay.
Right.
Okay. But in this environment, it's really buying the market and holding it for a long time will give you what happened last decade, which is basically a lot of volatility in your portfolio. Will be the same level where you started. So this is the time to pick individual stocks.
Mm-hmm.
Okay, this is the time to be buy and sell investor. Actually, buy stocks when they are undervalued. Individual stocks. Not trying to time the market, but trying to value individual stocks. Buying when they're undervalued. When they get to the fair value level, you sell them, and you look for other stocks to buy. So don't be afraid to hold large cash positions if you don't find things to buy.
Find what you're looking for.
That's right.
What is one of your favorite undervalued stocks you believe right now?
I think the sector overall that stands out the most is pharmaceuticals.
Mm-hmm.
The stock, I'll give you an example, Pfizer. Pfizer is a perfect example. Today's price, we know what the problem. The reason investors hate Pfizer because it hasn't gone anywhere in 10 years. The stock is down from 50 to 20. It has a huge drug expirations like Lipitor.
Mm-hmm.
Okay, but if you look at Pfizer, and you basically discount, basically figure out what the cash flows are going to be going forward, assuming all the drugs that expire will expire, and revenues drop 90% for those drugs. That's what the stock prices in today. In other words, this is a stock that prices in absolutely no growth going forward. And this is a company that spends $11 billion a year on R&D,
right,
and has 100 drugs in the pipeline. So I have a bet, that at some point they're going to come up with new drugs. Okay, in the meantime, you collect 4% dividend. So it's almost like there is very little downside the upside is, I don't know when, but they're going to come out with new drugs, and you get 4% dividend to wait.